Japan in 2026 is not the Japan you knew. Interest rates are positive, foreign capital is flowing in, and investing like it's 2024 will cost you money. Here are the 5 best ways to invest in Japan this year, whether you live here or not, including one opportunity most foreigners completely ignore. Let's start with the most important one. Stocks are the easiest entry point. But later in the video, I'll share an asset class that's literally dying out and creating a massive discount opportunity for savvy investors. So hold on and let's go back to the stock market. The Topix and the Nikkei 225 respectively grew 22 and 26% last year. Of course, they followed the global uptrend, but there are stronger forces at play. For starters, Japanese retail investors have literally poured money into the market to increase their return through the successful NISA program, which is the IRA equivalent for us, to the tune of an estimated 16 to 17 trillion yen in 2025, and there are projections for another 15 to 18 trillion yen this year, notably with the new NISA for minors, so for kids from 0 to 18 years old, which bring more money in the market. But that's not all. Japanese companies have been shifting faster from a stakeholder mindset to a shareholder first mindset, whereby they are now more concerned in creating value for the shareholders. It has drawbacks, for sure. But from an investor standpoint, it means that they're working to increase shareholder value and their share price. It's all benefit for us, investors. And several major asset managers, including Goldman Sachs Asset Management, expect moderate inflation, stable monetary policy, and wage growth to support earnings in 2026, with sectors like defense, nuclear energy, and technology often cited as potential beneficiaries. So, investing into Japan could be an interesting strategy, whether it's your home market or for global diversification. Of course, this doesn't mean that the Japanese stock market will go straight up. There are no guarantees, of course, because valuations matter, global markets matter, the value of the yen matters, and we don't know if the AI bubble will hold, for example. So of course there are shocks that can happen and we cannot foresee, but overall, as of today, it looks pretty positive. Now, if you are investing or decide to invest in the Japanese stock market, focusing on the indices rather than individual stocks is definitely the best way to go around, especially for the sector I just mentioned. So, look at ETFs and mutual funds focusing on the Topix, the Nikkei 225 and the Nikkei 400, like the local ones I'm now showing to you on screen, as well as others in USD that could be of interest. Those also are available in your local broker. I'm going to be linking a few resources down below if you want to go further. And if you want me to do a deep dive, please drop a comment down below. There was one before, but we can do another one very, very soon, because that's a super exciting subject and that's probably the easiest one for everybody to get into. Now, number 2, this one might sound very local, but hold on, even if you live abroad, because there is a catch. With inflation staying around 3% throughout 2025 and probably staying between 2 and 3% range this year, cash in a Japanese bank account is fine for your emergency fund, because you need it in an emergency, always available, but a losing strategy for anything else. So, in addition to investing in the stock market like we just discussed, investing your excess cash in foreign currencies to benefit from the higher interest rate might be a good idea, especially if you have your hand on it for any reason. If you need more convincing, here are the interest rates you can get on the yen and on major currency deposits in Japan. The figures speak for themselves. 0.2% on average before tax at Prestia Bank, Sony Bank, and Seven Bank. It can go up to 0.4% with special time deposit rates, but not much higher, and that's really, really low. Now, looking at foreign currencies, it's much higher, up to 3%, sometimes higher. So, do this. Pause the video right now and check the interest rate you're getting on your current saving account. If it's less than 2%, you need to check this. So if you already have currency exposure, this is worth considering. And for all of you living outside Japan, which is about 50% of all of you, sometimes 70% depending on the videos, the carry trade, whereby you're borrowing yen and invest in a stronger currency abroad, whether it's on the stock market or with time deposit, and you pocket the difference, might still be an option, but no longer the low risk trade many people assume. Try it out at your own risk, because that's some kind of a big risk, but this could be interesting. If this is helpful so far, please click the like button. It really helps the channel. Thank you so much. Now, let's move into the riskier side of investing in Japan. We're already at number 3, and that's cryptocurrencies. And this one is clearly not for everyone. Japan has a solid crypto regulation due to its past in the early days of crypto when it was really a pioneer market. And it had many issues. Most notably the big saga with Mt. Gox that's finally coming to the end, or to an end for some lucky few. And this has really changed the whole ecosystem. And that includes the fact that you have very, very clear rules around custody. Majority of assets, for example, need to be in cold storage. Exchanges have to be insured and registered with the finance ministry, and they are quite heavily regulated. That gives crypto actually a more stable legal footing, I should say, here than in many other countries. It protects individual investors a lot, and I personally benefited a lot from it. When FTX went belly up, you can check here, I was so happy to get everything out. And it also helped build a lot of very strong players like Coincheck, Bitbank, Giamonico, Bitflyer, SBI, which happens to be where I'm keeping my own account and also the biggest one on the Japanese market. And Japan even integrated Ripple to its finance system, for example, with it being used for international settlement with a big support from SBI. But crypto in Japan should be treated as a satellite investment, not a foundation. So no more than 5% of your overall investment portfolio is the usual recommendation, and I'm personally sticking to it because it remains really volatile and still taxed as a regular income in Japan. Yes, I know, it's a regular income, though it may change in the future, getting the 20.315% flat rate, but we need to wait for that. It hasn't been confirmed. So if you're already investing in crypto, Japan offers a relatively structured environment. If you don't, and this is not something you need, it's something you choose to do and invest in as an addition. Because for most people, crypto should never be the reason why they invest in Japan. It's just a small optional add-on. Number 4, real estate. It remains a valid investment in Japan, and you know it is one of my favorite after the stock market, but only if you are very selective. The relatively cheap prices and weekly have attracted a lot of foreign buyers, especially to Tokyo and other major cities, and it has contributed, together with very, very low interest rate, to changing the market from deflationary to inflationary. The prices of buildings and lands have risen sharply over the past 5 years, especially in major cities. I'm curious, by the way, do you think the price hikes in Tokyo and other major cities are sustainable? Or are we in a bubble? Please let me know in the comments down below. So all of this, coupled with the recent increase in interest rate, has driven a lot of people away from city centers towards suburbs, even further away than we used to, towards older units that now people are thinking about renovating, and towards becoming long-term renters because people can't afford to buy houses anymore. But on the flip side, this has created a unique opportunity to invest in the rental real estate market, with rent having gone up by 7 to 10% in Tokyo, 2 to 6% in major cities, and about 1.3 to 2.5% nationwide on average. Return on rental real estate are really going up without taking into account appreciation that's going on and tax deduction that you can get by owning the property. So with all that in mind, I still personally remain convinced that real estate can work in Japan to build wealth and steady income over time, especially now, but it rewards patience and local knowledge. Based on my own experience, here are a few things that matter the most. Number 1, where demand actually is. Where are people looking to rent? What type of property you are buying? And what type of properties renters are actually looking for. Is it a 1-bedroom? Is it a 2-bedroom? Is it an apartment? Is it a family individual house? How are you doing the financing? And having the right local team in place with a real estate agent, a fudosan, a property manager, a kanri gaisha, an accountant, your kaike, zeirishi, and a public scrivener, shiroshoshi, to support you along the way. Now, for all of you who know a little bit Japan, we have to address the elephant in the room. The political discourse since the late 2025 suggests that buying property as a foreigner may become more complex with potential additional taxes, paperwork, or number 3, restrictions in certain areas. That's going to be depending on your residency status and your locations. The details aren't fully clear yet, we have to wait a few more months until April, I guess. So if you are considering this, investing in the real estate, start by talking to a professional and structure properly. Okay, we are arriving to number 5, which is probably the least talked about, but also one of the most uniquely Japanese investment opportunities: buying or running a local business. Of course, you can start with your own company in Japan, right? If you have a good idea and the energy for it. Many foreigners have done it successfully, from restaurants to cafes to tech companies, services or real estate businesses like mine, though most of them are much bigger. Japan actually offers structures to do this, whether as an individual entrepreneur, which is called a Kojin Jigyonushi, a limited liability company, Godo Gaisha, which is the structure I have decided to go with, or a corporation, which is a Kabushiki Gaisha. But the real opportunity today in Japan, it is taking over something that already exists. Why? Because Japan is facing a major succession crisis among small and medium-sized businesses. Because traditionally, companies were passed down to children, but fewer and fewer of them want to take over from their parents, right? It's a lot of work. Actually, according to a late 2025 survey by the Tokyo Shoko Research, close to 60% of Japanese companies do not have a designated successor. The same study warned that this trend could eventually affect millions of jobs and significantly reduce the size of the Japanese economy if nothing is done. It's a real issue and a real opportunity at the same time. This has led to the rise of succession investing. Profitable operation businesses being sold simply because the owner is retiring. So you have platforms like Baton Z that now connects buyers and sellers, and even foreign funds that are entering the space. For example, one that I talked about before is the US-based firm called TeamShares that has expanded in Japan now for real, and that's partnering with the big bank Mitsubishi UFJ. They have a website in Japanese, everything is ready, they're really in the market to help. And after you have the national and local governments that are also offering subsidies, grants and support programs to encourage business transfers, which can actually significantly reduce the upfront capital needed when combined with bank financing. It's not easy. It requires language skills, obviously, operational involvement and experience, and long-term commitment, right? But for an experienced professional, right, this is the definition of an asymmetric bet. What I mean by that is as follows. In a typical startup, right, you pay a premium for future potential revenue that might never happen, right? That's what's called valuation. And you see those crazy investments, but you don't know if they're going to make money. In this case, when we are talking about Japanese succession deals, the dynamic is completely flipped over. You're often buying proven historical cash flow and existing assets for rock bottom valuation. We're talking about sometimes as low as 2 or 3 times the earning, simply because the owner prioritized the company's survival over maximizing their exit price. When you combine that low entry price with government subsidies that can cover part of the overall acquisition cost, your downside risk is significantly cushioned. However, the upside is completely uncapped. If you can take a traditional analog Japanese business and apply modern efficiency or digital marketing, you aren't just buying a salary. You're forcing a massive value appreciation. And that is the real arbitrage. Low downside risk, unlimited upside potential through modernization. That's why this is the most exciting trend in Japan right now. I hope this gives you a clear picture of how investing looks like in 2026 and why it's so different from just a few years ago. Let me know in the comments down below. Are you already investing in Japan? And if you're planning to, what's your attack plan? I read and reply to all the comments. And if you learned something today or simply enjoyed the video, please hit the like button and subscribe. I make regular videos about money, investing and life in Japan. And YouTube thinks you might enjoy this video as well. Go check it out while you wait for my next one. Thank you again for watching and until next time, goodbye.